Ready to elevate your credit understanding and score? With insider tips and a plan, you can take action to improving your score, which can save thousands in unnecessary finance charges. Let's tackle today's topic with your coach, Credit Christy.
Hey friends, it's Christy, your credit coach. Thank you so much for joining me for another episode. Today, let's talk about credit repair companies. As of 2019, there were about 81,000 credit repair firms that were in business, and that created a total revenue for the credit repair industry of about $3 billion. That's right, $3 billion with a B. So what is a credit repair company? If you've never hired one, this is a very legit question. It's actually an organization that says that they will help you to restore a great credit profile. You would only hire a credit repair company if you have a really damaged credit report, a credit profile that doesn't reflect what you want it to show. Let's face it, we've all had a past, we all made mistakes. Most of us were never taught how to work with money or how to properly utilize credit cards. So a lot of times we get into trouble either with credit cards, sometimes it's because of medical bills. I know a lot of people who bought a used car, it turned out to be a lemon, and they had to choose between repairing the car or making the payment. And the next thing you know, they have a repossession of their automobile reporting on their credit report. There's all sorts of reasons why somebody might have a damaged credit profile, but I know there's a lot of people that are considering hiring a company to help repair and restore their credit profile. I feel like the problem with many, but not all, credit repair companies is that they have a reputation of exaggerating promises. Sometimes they make claims that they really actually can't fulfill. And they do charge usually an upfront setup fee of a couple $100, and then it's, somewhere between $80 and $130 a month, with the anticipation of the credit repair or restoration taking somewhere between 6 to 12 months. So what was interesting that I found as I was doing research for this episode is that because our economy has been so strong with rising wages, lower unemployment, it tends to strengthen the consumer confidence. And so the credit repair industry has actually been declining in its annual growth since 2014. So think about it this way. The economic crash of 2007 to 2008, so many people lost their homes, lost their jobs. It was just a very, very difficult time. And so now you have a foreclosure or a short sale or late payments on your credit report. Maybe you couldn't pay off credit cards. You had to voluntarily surrender your car. Who knows what had happened at that time? But since then, you want to restore your credit profile so that you can get approved for new loans. In an economy such as that, I could see where credit repair companies and the industry as a whole was probably soaring in growth. But since 2014, when things really started to stabilize, we have low unemployment, we have higher paying jobs, there's confidence in spending, the credit repair industry is actually shrinking a little bit. But also keep in mind that everything in life is cyclical. So when we do hit our next recession or slowdown in our economy, or what we're facing right now, really high inflation getting ready to pop, that's when consumers struggle with the credit that they have piled up. So right now we're really confident, feeling good about the financial situation. And so that's where people tend to go out and borrow more money. So if you take on new debt through credit lines and then something happens in our economy and things slow down, all of a sudden wages might slow up, overtime is no longer available, extra shifts may not be available, or unemployment starts to sink in for some industries. That's where the credit repair companies will start getting busier again. So as you know, what reports on your credit will either save you money or cost you money, depending on what's reporting as far as your credit scores and your profile. So I found this very, very interesting. Equifax, Experian, and TransUnion, the three largest credit reporting bureaus, they have more than 200 million files on consumers in their database. Could you imagine having information on 200 million people? So in a typical month, they receive updates to the credit reports from approximately 10,000 furnishers. So a furnisher is a creditor, essentially. So that creditor will report your payment history on your trade line. Remember, a trade line is anything that reports on your credit. So a credit card, an auto loan, student loans, those are all examples of trade lines. So when would you hire a credit repair company if something is really wrong wrong on your credit report and you just don't have the knowledge, the bandwidth, the time, whatever, to remedy that on your own. There are lots of people that go directly to the 3 credit reporting bureaus, or they go directly to that creditor and try to straighten it out with them. So here's a fact. Roughly 77 million Americans, or about 35% of people with a credit profile, have a report of debt in collections. So about 50% of those that have a collection, it winds up being a medical collection. For the other 50%, it's credit cards that weren't paid, utility companies, cable or cellular companies that eat up the most of what makes up that other 50% of collections. So what is a collection? That means that you owe a creditor and they have not received payment from you and it's more than 180 days late. What I found very interesting is that those that owe money in collections, it's an average of $5,178. So again, half of those in collections are due to medical collections. And what's unfortunate is that most of the credit scoring models that are used for lenders, they aren't using the most up-to-date scoring model, which the more current ones tend to put less emphasis on medical collections than on non-medical collections. So the older systems actually just see a collection as a collection. And honestly, it breaks my heart because if you think about it this way, the medical industry is like one of a very few industries that you have no idea what the cost of doing business is until after the fact and you get the bill. And then those of us that have insurance, we think that we pay for insurance to cover that debt, and then we wind up getting bills from all different kinds of people. And I don't know about you, I've received bills from medical institutions long after I visited that hospital or that doctor. And I'm like, what took so long for you to create that bill? And why is it just coming up now? So if you're going to dispute something on your credit, let's talk about this for just a second. Most of the disputes that are created are against a collection. So about 4/5 of the disputes that happen on a regular basis to the credit reporting bureaus or to the creditors is disputing a collection account. Sometimes I've seen where credit repair companies will just dispute anything and everything on your credit report. And I don't think that's a wise way to go, because if something is reporting accurately, you don't want to dispute it. Also, the consumer scoring model that you see, which is called Vantage Score, which is like through Credit Karma and those kinds of things, when you dispute something, it has a temporary band-aid on your credit profile because it eliminates just temporarily that collection that is on your credit report. So it takes that collection out of the algorithm that creates your credit score. So you might see your credit score soar, but it's artificial. And so when people like mortgage lenders will pull your credit report, oftentimes it's 50 to 100 points lower because our scoring model, FICO, does not remove that collection because it's in a dispute. And I will tell you this, if you have a trade line that's in a dispute, you may have to remove it out of that dispute in order to get approved for a mortgage loan. Guess what happens when you remove that dispute? That's right, your credit score sinks. So if you are thinking about hiring a credit repair company to pretty up your credit report, here's a couple of things I'd like to say. Please don't hire them thinking that they've got some magic wand and they can make your turbulent past go away. If you were late on those car payments, if you didn't pay off that credit card and it went to a collection, those are a couple of examples that they can't necessarily make that go away. Now, if your auto payment is showing up as a late payment, but you truly weren't late and you've got documentation that proves that, they could help you remedy that if you're not getting anywhere on your own. Sometimes credit repair companies will help get addresses that are attached to your name removed, because if you have multiple addresses listed, sometimes that can have an effect on your credit score. Strange, I know. But a lot of times I see people go and hire a credit repair company simply for the fact that they're promised that they can remove things and make some things that are actually true and reporting go away. I just don't see the results often enough to say, yeah, credit repair companies rock. A lot of credit repair companies can remove inquiries. I'm not exactly sure how. So what I'm going to have to do is interview somebody from a credit repair company soon. But a lot of times we just need to let our past heal itself. So what does that mean? The older that those late payments or those collections become, they'll have less negative effect on your credit report. And make sure that you are adding positive trade lines to your credit profile to help kind of offset those negative things. I see so many people that just let these old collections or late payments age, but they're not doing anything to currently improve their credit. So the goal is to have at least one installment loan and at least one credit card paying on time for you, showing with active and on-time payments. Make sure you keep your debt utilization very, very low, which means try to keep a very small balance on all of your credit cards. You want your balance to be as tiny against your limit as possible. I know it's so strange. What's the point of even having a $1,000 credit card limit if I'm telling you to have just under $200 on it? What's the point? I get it. They create the game and we have to learn to play inside of their rules. So if you're in the process of building or reestablishing your credit, make sure that your payments are on time, you keep your debt utilization low, and you minimize how many inquiries you have. I just recently pulled a credit report on somebody who had 7 different inquiries in 3 different industries. So mortgage, auto loan, and credit cards. And you guys, their score sunk after that variety of credit inquiries because it's the different types of credit inquiries that hurt the most. Now this person looks like a potential credit risk. And if you had a bankruptcy or a repossession, don't expect a credit repair company to just remove that off of your credit report. It is your information. It's got a report there. The older it gets, the less negative impact it will have on your credit. And once it does drop off, which will be 7 years post the last date of activity, you should see an incredible improvement on your credit. So why in the world are there 81,000 credit repair companies out there? I don't understand. But for most people, you can get a really great credit rating by protecting your credit, paying on time, and not overutilizing. So who is the largest credit repair company out there? My research has shown Lexington Law. In my humble opinion, with the thousands of credit reports that I have seen, and with those who have told me they're currently in a credit repair agreement or they were intending on hiring a credit repair company, most of them do not actually need a credit repair company. Now, there are some who do, but if you just need a little help with disputing a trade line or two, inaccurate information, you really can do a lot of that on your own. My words to the wise is don't overspend by taking on more debt than what you can truly handle. You can finance everything from your house to your car to your education to your cell phone to your bedroom set. But just consider this. If you lost your job tomorrow, would you be able to handle all of those payments for a few months? Or consider this. If you had to live off of just cash money in your bank and no credit cards for an entire month, could you do it? I haven't done a scientific survey yet, but I wouldn't be surprised if most people could not. So many people need that credit card to pay their bills, and then they wait for that next paycheck to be able to pay towards that credit card balance. But there are literally millions of people walking around with credit card balances that will never get paid down the way they're doing things right now. So thanks for being here with me. I appreciate your time and being able to connect. And if you have a specific question or a topic suggestion, I'm open to hearing from you. Send me an email at questions@creditchristie.com and I will respond. And if we haven't already, let's connect on social media. I'm on Facebook, Instagram, YouTube, and TikTok at Credit Christie. Thank you so much for being here. And until next time, my friends, stay well.
Subscribe now and share with a friend to stay in the loop for new credit content and insider tips to maximize your credit knowledge. And follow Credit Christie on Instagram.